got it. Welcome to our tax talk. And I just said to everyone, get your coffee in hand, get your toothpicks out to open your eyes. And we're going to talk about a subject that typically isn't one that generates a lot of excitement. But, you know, here's what I want to really reiterate over and over again. You guys are taking an incredible tax advantage by having your own business. I really don't know a better way to help reduce your taxes than to have your own business. And that gives us many abilities to deduct things that if we just were a W-2 salaried employee, we wouldn't have this opportunity. So I've always said, if I didn't have my Juice Plus business, I would find a business somewhere, just because it provides a lot of great opportunities for us. And the best way I know to have tax deductions. So we're going to talk about those today. All right. So I don't know how much everyone on here knows, but I'm going to kind of start at the beginning, and we're going to walk through just all that there is in regard to tax. So there are a couple different ways that you can record your income. You can record your income, and typically most of us probably will follow what I'm sharing with you right now. And that is on a Schedule C form, which goes in your current 1040 tax return. So this is just like an additional form. Like Schedule A would be for your itemized deductions. Schedule B is for your interest and your dividends. Schedule C is for a self-employed income to be reported on this actual form. Now, some people, and typically when I was in financial planning, we would recommend, if a client had a business, once they netted about $200,000 a year, then you'd kind of look at going ahead and incorporating and maybe doing what's called an S corporation. But for everyone on this call, we're probably going to will be doing it through a Schedule C on their personal income tax return. And let me say, before we continue to go, feel free. I can't see everyone because of what I have up on the screen, but if someone has a question, by all means, go ahead and ask me now. We don't have to wait to the end. It'll probably make more sense if you ask it now. So if you have a question, please feel the freedom to ask. Okay, so your income and your expenses are reported on a Schedule C, as I mentioned, within your 1040 or your personal tax return. I looked at my own personal tax return, and if you look on page 1, you've got different expenses, and we're going to walk through these in more detail, but I added some of my own kind of at the end, and it allows you to put other expenses that kind of are a little more pertaining toward my Juice Plus business. And one of those that is kind of different. Well, one of those is discount and giveaway. I give away a lot of product. I will, allow people I'll give away complete packets. I will give away bars, Perform. I'll give away products like that so that people can try it. I'll give it away as a customer. Say I have a customer refer somebody to me, I may send them a bag of complete. So that's where that discount and giveaway, that's a little unique to our Juice Plus business. So I've added that. Also referrals. If somebody refers somebody to me and they become a customer, I'll take out of usually what I'll do is order specific Juice Plus products that I use as gift giving discounts and that I will give away. And that way I know exactly how much I've given away during the year. Postage is something else. I'll mail things. So that's not something that's in the normal list on your Schedule C. Your telephone, marketing supplies. So what marketing supplies might be, well, we'll get into that in a little bit. Our partner fees that I pay to be a partner every year. And then, sometimes I will give away some money to some of my team who've done well. And so that would be a deduction as well. I would send them a small bonus for their hard work. So those are some kind of personal expenses that I have on my own personal tax return that's specific to the Juice Plus company, that's not in the normal list of expenses. Any questions? Are you guys tracking with me? Okay. And Brenda, I can't see if someone raises their hand, let me know. Okay, so let me get rid. I know you guys can't see this bar, but there is a bar that's.
Elaine, and
Yes.
Chelsea just put a question in the chat about that the giveaways that would go under there, sample packs and that kind of thing.
Exactly.
So, yeah,
exactly. That's exactly what we're talking about. Okay, so here's a list from actually the IRS, and we're going to kind of walk through those, take notes. What I want to do is, we always want to be legal with everything we do. We want to be up and up, but at the same time, we don't want to miss out on true deductions that we can take as a business. So we're going to walk through those. Okay, I have a black bar. You guys can't see it. What's the very first one up there? Brenda, would you tell me what the first word is?
sure, it's deductible business expenses.
Oh, okay. So the first expenses accounting is the first one I see. Is that correct? Okay. So if you're paying somebody, and here's an example, how many of you does everybody, it'd be interesting to know, put in the chat if you do your own taxes, say most people probably do not do them by hand anymore. Maybe somebody does, but if you use a tax software and you do your own taxes, or you have someone do them for you, I'd love to see kind of a breakdown, and we'll circle back around. Put that in the chat. But in regard to accounting, a lot of you may pay someone to do your taxes. So although you wouldn't get a full deduction for that because you'd have paid them to do your personal taxes, but your accountant will prorate between what you pay personally and then what you'd pay from a business standpoint. So you'd be able to write off a portion of that. Advertising is another deduction. And an example of that would be, many of us have what's called project broadcast, which I pay, I think, about $25 a month to be able to send out a message to all my prospects, to my customers, to my partners. I can send information out to them. So this could fall under that advertising piece as well. Amortization, we don't need to worry about that. Would not apply to Juice Plus. Probably our answering service would not apply. Most of us don't have answering services in pertaining to Juice Plus. In regard to your auto expenses, there are two different ways that you can take auto expenses. One is actually writing off the actual deduction or expenses of an automobile, or you can track your mileage. I always kind of put a caveat onto this talk in that I haven't done taxes for 25 years now. So you get what you paid for. So I'm just giving you what I know. But back 25 years ago, we would have an automated calculation to kind of compare actual expenses to mileage expenses. And almost every time I ever ran it, mileage was a better route to go. And so I'm going to show you a little bit later how to track your mileage in relationship to your Juice Plus business. An example of mileage would be if I travel. A couple of weeks ago, we had an event here in Peachtree City, a training, and people traveled to get here. So you track your mileage to come here. Let's just say John Deere down the road wants some complete, and he's not quite ready to order, but wants to buy a bag of complete just to try it. I would get my car, I'd take it to him so I could write off that mileage. Those would be examples of mileage that you would track, and I'll show you how to do that a little bit later.
Elaine, sorry to interject, but after deductible business expenses, there was, right before accounting, was cost of goods sold, and they were asking about that.
Okay, thank you. I'm sorry, there's a black bar and it's knocking off the top of my presentation for me to see anyway. So cost of goods sold has to do if you have inventory, which like here would be example for, and thankfully we don't have to deal with cost of goods sold. That would really, that's a nightmare to have to try to do that personally if you're not a tax person. So that would be if I was carrying inventory, I'd buy inventory by the end of the year. Did I sell all that inventory? You have to track what you had at the beginning, what you have at the end. Thankfully, we don't have to do any of that. Woohoo! Juice Plus takes care of all that for us. So we don't even have to worry about cost of goods sold.
Okay. One more question, Elaine.
Yes.
Doug said, where did you get the 2000K as time incorporate then subchapter S?
Where did I get the 2000?
K.
200.
Oh, 200,000. Okay, I
sorry,
got you.
I'm sorry, you're right. Mhm.
That was the kind of the, okay, so going back to the question is, if you incorporate your business, you and create a separate entity, an S corporation, let's say, you can, let's just say you netted 200, let's just say you grossed 200,000 in your Juice Plus business. At a certain point, the IRS says, okay, you don't have to claim all of that as actual in labor, basically saying that, you know, how much it would, you would typically pay someone to be a Juice Plus rep, maybe 50,000 from a time and investment standpoint. And then the balance above, say 50,000, 75,000 could be considered a dividend. And so what you're saving is on self-employment tax. So I know that may not make sense, but if I recorded all of that income on Schedule C, all of it would be taxed by self-employment income tax. So when you incorporate, what a lot of times you're doing is, one, you're protecting yourself if you're in a field that you could be sued, as well as it gives you an opportunity for income to be taxed as a dividend versus all of it being taxed as self-employment income. Now, the reason we kind of waited for people to get to that level is then if you incorporate, then you're paying for an additional tax return. Then you're paying for accounting fees every month, because then you're running payroll. So there's a lot more expenses involved then you've got to pay to become incorporated. And then every year you've got to pay for incorporation fees to remain a corporation. So there's a lot of added expenses. And so if you're not making a certain amount of money, it really doesn't pay, and it becomes a lot more work to incorporate. So typically back 25 years ago, that was kind of our break even that made sense, that, okay, it's probably you're earning enough income now that you may want to go ahead and incorporate. Was that clear as mud?
He says, as a corporation, do I have a better tax rate? And as corporation, I can sell stock.
Yeah, I don't know that selling stock would have anything to do with what we're doing here. So, and that's kind of a whole new area that I really never got into. I did more business valuations, but that would never pertain to, you would not sell stock from a Juice Plus from what we do. All right.
Okay, and another question back to cost of goods sold. What about if you were to sell product you have on hand that you sell to someone who isn't ready to place her own order?
We're not supposed to do that as a Juice Plus company. So the only time I would do that is just, like I said, if someone wanted to try it, but you're not buying inventory that you're holding. So it still does not apply.
Right, right.
All right,
We're good.
let's, any more?
Nope, we're good.
Okay, let's keep going. Okay, so we'll circle back around on auto expenses. Bad debts would not apply to what we do. We thankfully, Juice Plus takes care of all that. So many of these Juice Plus does for us, which is again, emphasizes how wonderful it is, what our company does for us. Computer supplies, maintenance and expense. I have a computer guy come out on a quarterly basis, just keeps all my computers up and running, my phone, my iPad, my computer. So that would be a deductible expense. Consulting fees, right now I have a business coach that I meet with on a monthly basis. So I pay her to coach me in this business and help me keep moving up. So that would be a deductible expense. Contract labor, I have an assistant who comes once a week and helps me in my home office. And so that would be a deductible expense. Charitable contributions, I would not really recommend even muddying the water. If you're going to make charitable contributions, make it personally. I don't really know. I guess something that, and I was going to share this with the team, Guy DeBoo, who is a 100 Club Juice Plus partner. He's trying to put together an effort for all of us to buy complete, not all of us, but anybody who wants to, and he's going to try and get the complete over into Ukraine and the surrounding countries for the people right now who are struggling to eat. The soldiers, not wanting to be anything political other than just a humanitarian act. And so be on the lookout for more information if you want to help in that regard. But let's just say if you gave something, let's just say you bought 2 or 3 boxes of complete to send over there, that would be considered a charitable contribution, or you could book it as discount and giveaway, either one. Probably, since it's not a qualified charitable organization, I would put that under discount and giveaway. Depreciation, your depreciation would be calculated on if you have a computer and you bought a computer, they would depreciate it. And so you don't need to worry about that. Your accountant or your computer, if you do it yourself, your software will calculate that number for you. Dues and subscriptions would be if you, like I order Prevention Magazine. Occasionally I will buy books, health books, coaching books, all of that would fall under that dues and subscriptions, or educational expense, either one. Gifts, business gifts. So I buy gifts for people, someone passes away, someone has a baby, that kind of thing. That could be a deductible expense. Home office expense. So I'm sitting in my home office, and it is calculated based on the square footage of your home office, as opposed to, I see Mara yawning. I get it, Mara, this is a lot. I'm sorry, it was just funny. I can see a few people. I picked on Mara, I'm sorry. Anyway, so the entire square footage of your house, and then the square footage of your office. So it's prorated. So then any expenses you have on your house, it's prorated based on the size of your office in correlation to the size of your house. And so this is something, but however, if you have a home office, it can only be used for Juice Plus purposes. So you can't, be doing all kinds of other things. You can't have it in your family room and you're watching TV and all that. It has to be strictly for your Juice Plus business to be considered a home office. Insurance. So if that's your homeowner's insurance, again, it would be prorated. If you took a home office deduction, then your insurance for your whole house, it'd be prorated by the square footage of your home office. And that calculation will automatically be done if you're using software, or if you have an accountant, he or she will know how to handle that. Interest expense, other than if you're paying mortgage interest on your house back to the proration of your home office, there's really not another reason why you should have any kind of debt associated with your Juice Plus business. Janitorial expense, same thing. If I have someone who cleans my house, so a portion of the size of my office would be able to be written off. Laundry and cleaning expense, can't think of a reason you'd need, that would be an expense that we would have. Legal and professional expenses, I pay someone to do my books for me so that it comes time to send, to do taxes. I've got them already recorded. And I'm going to show you guys an easy, simple way to do it, but that would be another deduction. License and permits. I do have an LLC, and we won't necessarily get into all that right now. And so every year I have to pay to keep that, those fees up, corporation fees up. Management fees, don't think we have any reason for that. Meals and entertainment, occasionally I will meet with, whether it be potential partners, current partners, potential customers. Occasionally I may pay for meals or entertainment when we as a team go to a conference and we go do something fun. Those would be reasons that would fall in that meals and entertainment. Office supplies, I think we all know, we all buy paper, ink, et cetera, for our offices. That would be deductible. Pest control, that's going to fall under your total house expenses and prorated to your office. Printing, postage, definitely postage and shipping. I do a lot of sending people, samples. Printing, that would be, sometimes I do, if I'm going to do a big expo and want a big sign printed, I would pay for that. Rent, I'm not typically renting anything, nothing. I guess if I took a bunch of people to conference and rented a van, I guess we could put that under there. Repair and maintenance. Again, back to, if you claim a home office and you do repairs or maintenance on your house, then it would be prorated the size of your office to take that deduction, that percentage. A retirement plan, here is an excellent way to get one of the absolute best deductions, and that is as a sole proprietor, which all of you on this call are doing the Schedule C on your tax return. You can set up a SEP IRA or an IRA. The difference between those, and we won't get into that, SEP IRA is going to allow you to give up to 25% of how much your net income from Juice Plus is. So that's it. Whereas if you set up a regular IRA, you're going to be restricted to the 2,000. I haven't even looked. I'm assuming it's still 2,000 per year. So a SEP IRA is going to get you more ability to put more into a retirement account. So once you put money into a retirement, let's just say you put $5,000 in this year, that will reduce how much income you'd have to pay taxes on. So an incredible way to, a great reduction in taxes if you do fund a retirement account every year. Okay, where are we? Salaries. I don't think anybody on here would be paying someone as an employee. Security expense back to the home office. If you have a security that you pay every month, monitoring, it would be prorated to your home office. But none of these home expenses can be taken unless you're claiming a home office. I'm trying to think. I don't think there's any taxes other than income taxes associated with our business. Obviously, telephone, tools, if you've got a particular tool. So I know an example might be, if I'm doing events and I need a projector and I order a projector, purchase a projector, that would be an example of a tool. Travel expenses, that would be anything outside of mileage. And then uniforms would not apply to us. And let's see. And then the last two are utilities and waste removal, which again would be prorated if you had a home office. All right, I'm going to stop there. Any other questions,
Yes.
Brenda?
Yes, yes. Okay. First, Titch was asking, do we not include auto expenses as a means to meet customers? And I said, I guess she's talking about like driving to meet them. Can we
Yes,
include that?
that would fall under you would track your mileage, and I'll kind of give you a couple ideas on how to go about doing that.
Okay. And then she's asking, she didn't know about gifts for customers, and phone. I think you just covered that. She says, what if someone does Juice Plus in another business? Can they split the cost of most of these?
Say that again.
What if someone does Juice Plus in another business? Can they split the cost of most of these? I'm assuming deductions.
Yeah, I mean, I think you do it based on what the actual expenses were. So yeah, some of them would have to go to, like she said, I would prorate, I would decide, okay, how much am I using for Juice Plus versus another business?
Okay.
And I think that's just a conversation, either when you key them in, you figure out, okay, I do, 40% this other business, 60% Juice Plus, and I would just do it across the board and split, the appropriate expenses like that.
Okay. Doug said in terms of your, I think the home office expenses, he says, I've always used one room out of the 8 rooms, and this is usually a large deduction that he doesn't need for his home office. Okay.
Yeah, definitely.
Let's see. For rent, can a festival booth rental cost fall under that?
Yes, absolutely. Great example.
Okay. And then could that be for cost of renting? Okay, so renting a booth for a show. I think that's both.
Absolutely.
Okay. And then Doug said that the STEP IRA is great information. Thanks for sharing that. So
good. Okay.
Everybody.
All right, we're gonna move on. Okay, so here what I did, and it's just and it's older. I did this years ago, but still happy to share it with you all. An Excel sheet. In the beginning, your deduction, if you make less than $600, Juice Plus is not going to send you a 1099. So if you didn't get a 1099 for 2021, you probably didn't make $600. If you make more than $600, then you will get a 1099 from Juice Plus. And so once your income starts to build, nobody likes to have a big tax surprise at the end of the year. And I remember, I always tell this story, and I'll never forget the client's name. I had just started as a financial planner with this firm, and the partner who I worked for came into my office and he was like, Elaine, I need you to call Mike Espinlaub. He owes $50,000. You need to let him know. And I just remember thinking, oh my gosh, this is what I'm going to be doing. So anyway, nobody likes a tax surprise like that. So once you begin as your business grows, you want to be on top of this so that, come April 15th of every year, you're not sweating bullets of how, where you're going to find the money to pay the taxes. You want to prepare as you go. I personally use Quicken, and that's how I track mine. So it's all on a computer. And I would have these expenses in there so it can be done that way. So if you have some kind of already currently that you're tracking your expenses, then just continue with that, but add a section for your Juice Plus business. But what I'm showing you here is just a simple Excel calculation of, let's just say your check last month was $600. So I put in, at the end of the month, I would just roughly do this, either through Quicken or some software, or if you want to just manually have a file, and as you have expenses, drop your receipts in a file, and at the end of the month or at the end of a couple months, maybe you do it quarterly, you just sit down and you kind of take a look at, okay, let's say February I made $600. And I'm going to come back, circle back around. I'm going to show you how you'd put in your auto expense. So that we're coming back to that one. Depreciation expense, like I said, we're not going to worry about that because we're going to leave that up to the computer. That's not going to be that big of an adjustment. But I would just go down through, look at my any receipts that I have, throw them on here, total my expenses, minus them from the income, and get a net amount of income. Now, how I'm sharing with this is just rough numbers, but what it's doing is it's just helping you set aside money on either a monthly or quarterly basis so that you'll have the extra taxes. Then what you want to do is, depending on if you typically get a refund every year, then you probably got some cushion and you don't have to make estimated taxes for a while. But let's just say you cut it close every year and you kind of break even. Once your income begins to grow, and if it's at $600 a month, then I would definitely start doing this. Then you want to start making what's called estimated tax payments. Hopefully most of you know what that is. But unlike a W-2 employee, what happens is when you're self-employed, you have to pay your own taxes. Nobody's doing, Juice Plus just provides you with a 1099 at year end. So you're responsible as a business owner to make sure you're paying in your taxes. And so on April 15th, June 15th, September 15th, January 15th for the prior year, you send in an estimated tax payment. And so on a monthly basis or quarterly, whatever you want to do, that's why you want to start putting money away. So when it comes time to send in that estimated tax payment, you have the money to do so. Now, do you or do you not need to start paying estimated taxes? If you typically, like I said, have a refund coming back to you, you're probably okay for a while. When that number starts breaking even and you're, maybe starting to begin to owe money, then you want to start making the estimated tax payments. I'm going to stop for a minute because that may be a little confusing. Any questions? Okay, good. All right. So that's kind of just a quick and dirty way. And what I would say is, okay, so let's just say you come down and you had $500 for the month. How I would do this is, let me go to the next page. I'm going to jump to point 4, how to calculate how much tax to put aside. And if I were you, if you're planning to build a sizable Juice Plus business, then would be my recommendation, is have a separate tax account where every month you're just putting some money in that account. And to give you a good rough estimate, how much to put in there, if you look at last year's tax return, and what you're looking at is, if you read here, I've got to calculate your effective tax rate. So when you pay taxes, your tax rate goes up as your income goes up. So the first, I think it's like $9,000 is at 15%. And then the next 9,000 is like at 21%. So it works its way up. So I can't just say, oh, you're X amount of money, you pay X amount percentage in taxes, because everyone's different and it's constantly moving. So this is like, I don't know. We're not trying to be accurate here. We're just trying to be prepared. So how you look at line 43, and hopefully these numbers haven't, I should go pull a tax return because it's been a while since I put this together. But you look at your prior year's tax return, line 63, and that's the amount of tax due, divided by line 43, which is your taxable income. And that's going to give you an effective tax rate. So you may be married, other income coming in. So there's no way for me to give you an amount of, oh, okay, if you're making X amount, in Juice Plus, this is how much taxes you're going to pay. I don't know because I don't know your tax picture. So that's a great way of saying, you know, you may be in the 30% tax bracket because other income's coming in to your household. So what we're trying to do is get you a gauge of your effective tax rate. I'm gonna stop there for a minute. Did everybody track with that? Or am I starting to see people's eyes glaze over?
No, but I do have a question from
Okay.
Doug. He says, can I write myself a paycheck every month to pay my taxes, i.e. Social Security and income?
Well, that's where I'm saying every month, calculate, you know, here's what my net income is, figure out what your effective tax rate is, and put that money in a separate savings account or money market account. And then on a quarterly basis, like I said, April, June, September, and January, then you make estimated tax payments to the government and to the federal government and to the state government. And the federal government includes your Social Security, Medicare, or whatever, that's OSAI or whatever that number is or term is. That's all calculated together in your federal estimated tax payment. So you do it on a quarterly basis. Did that make sense?
He said, of course, I need a separate bank account for business.
Yeah. Yes, definitely. Anybody else? Any other, did that all make sense? Okay, we're going to keep tracking. You guys are doing good. Oh, let me go back to point 1 here. And this was tied to the auto expenses. What you want to track is you always want to know what your beginning mileage is off your vehicle as of January 1st, and you want to pick it up as of December 31st, because your accountant's going to want to know your beginning mileage, your ending mileage. And then, you know, that way, you know what, from January to December, you know what your total mileage is. Then how I track it is I track everything on my calendar, where I go, how far, you know, what mileage it is from point A to point B. And then at the end of the year, what I do is just go back through my calendar and I track my business mileage. I go back through each day and see what business mileage I may have had on that day. Because your accountant's going to want to know beginning mileage, ending mileage, total mileage, and then total business mileage. And then what you get is 56 cents per mile. Is that everybody tracking with me? Okay, we're going to move on then. Almost done here. Let's see, what time is it?
Wait a minute. He said, is the mileage rate over 50 cents for 2021?
2021 is 56 cents. And I haven't heard if they've changed it for 2022 yet. Okay, so this is kind of, you could print this off and just on a monthly basis, look at your calendar, you know, have a notebook every time you jump in your car and you travel somewhere, jot down your mileage to and from. And then, you know, this, you could hand this to your tax accountant, or you can total it yourself when you get ready to do your taxes once a year. Okay, I am going to stop. Wow, we went from about 6 people.
We're up to 25.
Hello, everyone. Okay, I know that is a lot of information, and I know you guys are probably about to fall asleep, but I just want to encourage you guys. This isn't, you know, so many times people focus on how much money am I making, when in reality, as a financial planner, what I learned, what's more important is how well am I managing the money I'm making. And part of being a good money manager is literally taking advantage of the tax deductions that we have because we own our own business. And that's a beautiful thing. And we want to always pay what we owe, but we don't want to pay a dime more. So let's be great money managers. Juice Plus has given us an incredible opportunity to make as much money as we want. There's no ceiling on how much money any of us can make. anybody on this call, and some of you guys are tracking fast, you can make more money than me, and I will cheer you on every step of the way. There is no ceiling on how much we can make in our Juice Plus company. And that is a beautiful thing, being self-employed. But I always love, my husband always used to tell our girls, we're going to give you as much freedom as you want. But guess what? As much freedom as you get a balancing amount of responsibility. And so that's the same. We have the ability to make as much money as we want, but we also have this responsibility as business owners to really manage our business as well. And so hopefully this helps. Again, you get what you pay for. So this was a free mini seminar. I'm giving you the best of my knowledge. Nobody nail me to the wall if I'm a little behind on some of it, but I think to the best of my knowledge, everything I share with you is accurate. Anyway, hopefully that helps, and I'm happy to answer any more questions that anybody has.
Well, I love what Dave Ramsey says, and honestly, Ron Blue, that the best thing you can do for your finances is to have a network marketing business.
Absolutely. I see it when I look at that tax return. I mean, when you think about it, just about every, like Saturday night, we went out with a couple. They're brand new customers of mine, so you know what it also does is it gives you, for me, it gives you the freedom to be more generous, because one, you've got the money coming in from Juice Plus. Two, because I'm like, okay, we sat and talked about Juice Plus. How you doing? I want her to be a partner on my team. So I'm able to write a nice dinner off. So those are the things to really take advantage of, and make sure you're paying attention and tracking. If you wait till the end of the year, you're going to forget a lot of stuff that happened. So I encourage you to just take 10 minutes a month and take an overview of your business. And hopefully this will really benefit. I know it will. If you do it, it'll benefit you from a tax perspective.
And Doug said that QuickBooks has a mileage tracker too. Awesome.
I didn't even know that. I think I'm on an old Quicken, what I want to say, I need to update my version. There you go. I need to update mine. So thank you for that. Any other tips that you guys have that maybe you want to share that I missed?
I don't have a tip, but I do have I don't know if you all can see this. You probably can't. It's a pretty nice picture here, but can you see it?
No, we can't because your background.
Okay, I'm going to describe it to you. It's a picture of two tables, and the top of it says, you probably have seen this, but it says, think of your income as a table. So the table on the left has one leg in the middle, and the table on the right has four, and it says only one leg to support the table. If one leg breaks, the table collapses. Multiple legs to support the table. If one leg breaks, the table will wobble but remain standing. I thought that was pretty cool.
Nice. Very good. I know.
Emphasizing multiple streams of income.
I know Miracle shared that visual with me a couple years ago. I love it.
I saw it on Facebook somewhere. I thought it was pretty cool. I had to save it.
Thanks for resurrecting that. That's a great reminder again of how beautiful our Juice Plus business is. It can be a full-time income for us, or can be an incredible additional income stream into the household. Anybody else?
And we're incredibly blessed that our leader knows all about this and can help us with it, because I'm telling you, I don't know of anybody else that has this. So,
well, again, you get what you pay for. So
true. So not true.
All right.
So much.
Well, guys, if you think of any more questions, feel free to send them to me, and we'll continue to chat further. But thanks, y'all, for being on the call. And thank you guys for just wanting to build strong businesses, wanting to grow. I mean, I love this. I love, probably for me personally, absolutely love seeing people get on Juice Plus, knowing what it's going to do for their health. And we all have our stories. But I also love this other piece, maybe because my background is in finance. I love to see people succeed. I got to give a shout out to Mara and Sandy. We've been on Voxer all morning. This team is exploding. And I'm looking at Gloria and Xenia and sorry, I'm missing some of you, but that team is exploding right now. And I cannot be more excited. It just makes me so happy to see the impact that our Juice Plus can have on our bodies as well as on our finances. And so you guys, we need to tell people, we need to make sure we're not holding back this incredible opportunity, both product and business that we have, because so many people, everybody can benefit from Juice Plus. Sandy, you were going to say something?
Yeah, but it was in regards to, I was in another group years ago. We had an accountant on our team, and she was really big about travel expenses. So for anybody, I know Tish is about to go to Mexico, and I've done that on 2 different occasions, save everything, because we went on a family vacation a couple years ago, well, before pre-pandemic. And what I did was before I went, I got like little gift bags together with like Complete and chewables, and I made little gift bags. So everywhere I went, these were friends that I went to go see, I gave them a sample. And we talked very briefly, but that was, my accountant was extremely happy when I gave her all of my expenses that were in regards to that. So anytime you're going away, make it a Juice Plus, make it an event so that you can use it to your benefit for a tax write-off, because it will add up, and that's great. So for those of y'all getting ready to go away.
And especially if you get an order from someone you meet there too, that's the best.
And I have a customer because of that too, as a result.
And
So,
even better, do an event while you're there.
yeah.
Yeah,
Yes.
exactly.
All right, guys, thanks y'all for
Elaine,
Yes,
before we close, can you just give us a real good plug? What's coming for the next 6 weeks?
Okay. Y'all, Brenda and I talked, you guys know as much as we do. And so be ready to receive a call from us, because some of you already know we're reaching out, asking you guys to start your studying and do your homework now. But we're going to start a series on products. And I don't know that we've ever really dug deep into our products.